His financial tentacles reached into every vein of American vice. Among Rothstein's many holdings were most of the bucket shops in the major cities of the United States. So here's the interesting part, and it just goes to show what the LBMA unallocated market is, and also the COMEX to some extent. Sunday, June 6, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at why acquiring physical gold and silver is so important, at least for me, and hopefully for you as well. For me, it's a couple of things. It's a vote of no confidence in our leaders, and I've been doing that for almost 20 years. Yes, that's how long I've really been, how can I say, aware of how corrupt our leaders are, how much they lie, how much they steal through inflation and many other things, how much they're captured by people at the top, people like the bankers, the globalists, the big corporations. And I have to say the last 15 months has proven that in spades, not that it hadn't proven before. It's also a vote of no confidence in the value of things right now, the way things are valued, mainly because I don't trust the way our leaders run our monetary and financial system. It's all a house of cards. So I think having physical outside the system also stops you financing these people, because if you understand the monetary system, the fiat currency system, you will realize that by holding their currency, you're financing them, because fiat currency is just a credit note to the bankers, to government. So yeah, if you withdraw physical from the market, from COMEX, from the LBMA, be it silver or gold, you're actually hampering these people. It's the only way. And I like to say a few things before I go on as well. If you enjoyed this video, make sure you subscribe to the channel. If you've seen some of my other videos but are not subscribed, I think it helps the algorithms. It helps us spread the message to the world of sound money, of decency, of trust in the individual, because the philosophy of the globalists, of the internationalists, is that they know better and they want to control people. So please, yeah, hit the like button as well. Hit the notification bell to be notified of all my new videos. That would definitely help. And before I go further, I'd like to say that the Silver Squeeze Reddit page or Reddit group has gone over 100,000. I remember I did my interview with Jim Lewis and Ivan Bayuki of Wall Street Silver about 10 days ago, and we were up to 82,000 silverbacks. We've just hit 100,000. Let's hope it goes exponential. The movement is spreading, the Silver Squeeze movement. And here's my Silver Squeeze mug I designed for my Teespring store. It's got Billy and a silverback, some silver coins, and a silver bar. Just have a sip of my coffee. If you're wondering where Billy is, he's still upstairs asleep. It's very early. I got up early today, this Sunday, and I thought it would be good to come out with what I'm thinking. So yes, make sure if you're on Reddit, or if you're not, maybe join Reddit and join Wall Street Silver. Subscribe to their YouTube channel as well. I think they've got almost 20,000 subscribers, and they interview very interesting people, a lot of interesting interviews. Highly recommend it. So yesterday, actually, yesterday morning, I went to my local coin shop, Peter Morris Coin and Metals in Bromley. It's in the southeast of London. And he's more of a numismatist, but he does do bullion, but he doesn't have bullion all the time. He might have it sometime, bullion, gold and silver. He had some 2-ounce beast silver coins. I didn't buy those, but I bought a couple of crowns from 1890 and 1891. Beautiful coins, as you can see. So you might say that it's only 2 coins. Well, it is, but I try to do it regularly. I think little often is good. Or if you come across, or if you're able to have a lot of extra fiat, yeah, get more. So this is 1890. This is like what you'd call junk silver from the UK. It's about 1.66 troy ounces of silver here. And I also like collector's coins or numismatics. So I bought a couple of sixpence. One from 1887, as you can see here. Sixpence. And there's an interesting story behind that coin. And then one from 1815 with a shield. This one doesn't have a shield. And that's the interesting story. So what's the story behind this sixpence that doesn't have the shield? Well, they originally minted the sixpence with a shield back in 1887, but the size of the sixpence was the same size and approximate weight of the half sovereign, which is a gold coin. And a lot of people were coating it or plating it with gold and giving it away as a half sovereign, which was a huge problem. So they decided to discontinue the ones with the shields and just wrote sixpence, because you couldn't like gold plate that and try to pass it on as a half sovereign. So that's the story of that coin. That was Mr. Morris, Peter Morris, who told me about it. If you're in the UK, you like to check out Peter Morris, Google it. You don't have to be in Bromley or near Bromley to get stuff from him. You can call him and he'll ship it. And mention my name as well. Mention Monaco64 or Mario, and hopefully he'll give you a better deal. So what else? Yeah, interesting price movement last week on Thursday and Friday. We saw the takedown of the paper market by the usual suspects on Thursday. And then on Friday, we saw a huge rebound, almost as if the previous day hadn't happened. And I thought that was encouraging. Overnight, from Thursday to Friday, Asian hours, gold got down to 1855. There were a few technical analysts out there, including Rafi Farber, who were speaking about the fact that they did expect a retest of 1850. And I think we got that, but it was so quick. Most people were asleep in Europe and in the US to actually catch that. Maybe it was the bullion banks running for the hills. I think that's what it was. And we rebounded back almost to 1900 on Friday. I think we closed around 1891. Silver didn't get back above 28, but it looks pretty good. So I'm not concerned. So just quickly look at the charts here before we look at a few other things. As you can see, the gold chart, that's a weekly chart going back about 3 years. So you can see we're safely still above this trend line. Yeah, I think it's still looking okay. Yeah, we could still see a bit of short-term weakness, but the key level here really is still 1920, 1923. I think the high last week was 1915. So they've set like a target as well around that level. I think if we break 1915, then we go straight through 1920, 23. I'm sure there will be stops there. Technical levels always have those. The silver chart as well. I've been following this pennant for a while. Yeah, they're trying to bash it back below that, but they weren't able to keep it below the top part of the pennant. So it's still looking good, silver. And yes, regarding what I talked about earlier in the video about gold and silver being, how can I say, they're a revealer of true wealth, I think, of true value, and not just gold and silver, but real things. And they've been manipulated for very long, I would say since 2011. Commodities, tangible assets have been heavily undervalued. Yes, lumber has had a big run and it's probably correcting, but overall, I think there's a lot more opportunity being along hard assets on a financial basis, but also on a individual basis. Because looking at the way the world is right now, I mean, you see things like this here in the UK, and I'm not going to talk about it. I'm just going to show it to you on the screen. You see things like this from the FT, people talking about what's going to cause inflation now, as you can see here. I'm not going to mention it as well. They even have a sector for, as you can see here, they're making it really in your face. And why are they doing that? Why are they, even the central bankers now are talking about the climate and everything, how they have to get involved, even though Jay Powell kind of distanced himself from that in the recent conference, Zoom conference he had with other central bankers, when asked by the FT moderator, Gillian Tett. FT, of course, is a huge part of the globalist agenda about climate change. Jay Powell said it was for the elected officials, really. He said the central bank in the US doesn't have that mandate, and I thought that was encouraging, even though Federal Reserve, you know how I feel about the Federal Reserve. We should end the Fed, and all central banks for that matter. So yeah, the world's getting mad. I think it's all about control. They want to control us. And it's very hard for you and I to do anything. All we can do is, unfortunately, we need to have a foot in this system. But I feel that being in physical silver and gold, having the philosophy of sound money keeps us a bit sane, not only up here, but it keeps one of our feet outside the system. Yeah, that's the way I look at it, and that's why I personally keep stacking whenever I can. What else? Yeah, Basel III. There's a little bit of maybe not controversy, but an article on LinkedIn by a guy called Ross Norman. He's supposedly a gold advocate. I think he was CEO of Sharps Pixley, a major bullion dealer here in London. He sold that company off, I think, to Heraeus, a German big bullion company in Germany. Now he's CEO at Metals Daily, and he wrote something on LinkedIn, and he says, Basel III and gold, central bankers locking the fire exits. I'm not going to go through the whole article, but he's basically an apologist for the LBMA and unallocated gold. Yeah, that's what he is. He's actually saying that if they go through with the implementation of these rules on June 28th, all it's going to do, it's going to make the market less efficient in London, and that people are going to abandon the market. Well, I hope so, because the kind of market he's talking about is not real gold. It's the casino. It's the bucket shop. And we're going to come to what a bucket shop means. That's what unallocated gold is. It's not real. Yeah, so that's a good thing, Mr. Norman, I would say. But funnily enough, there were comments below, and I commented to one of the replies he had to a comment. So this is what I replied to him, and I'm reading this right now from LinkedIn. I took a screenshot of it yesterday because right now I can't see his reply anymore. I'm not sure Yesterday, the same thing happened and then it came back. I'm not sure if he's deleted his reply, but this is my reply to him. And I said, the bullion banks rehypothecate many times over in London, and it is super efficient. Why did I put it into brackets? Well, because it's the term he used. Because they are just betting like one would in a bucket shop. Bucket shops were super efficient. There was no exchange of actual stock certificates, just as there is no exchange of bullion bars in unallocated, as it was all made up in the days when Jesse Livermore started out. But there was nothing behind it except betting on the prices. And that is why Jesse Livermore eventually moved to or graduated to trading through a real stockbroker and trading real stocks. And I finished my comment by saying the London bullion market is a bucket shop, and hopefully that will end with Basel III rules on unallocated gold. So yeah, his excuse is that fake gold is good because it's really efficient, don't have to move bars around, and allows miners to hedge a year forward. Well, I would think that a year is enough time to move bars around, Mr. Norman. So it's interesting that Ronan Manley also made some comments here. Because Ross Norman said the central banks, they hold 90,000 tons, which is complete rubbish. They only hold 35,000. They hold 17% of all the gold that's been ever mined. That's around 200,000. So he was saying that the central banks had almost half of all the gold ever mined, which is not true. And Ronan brought him up on that. He said, Ronan Manley said, you need to define unallocated gold here. It is not unallocated with backing of physical gold. It is merely unbacked synthetic gold credit that is the unit of trading in London, and which is cleared by LPMCL. The article doesn't make that clear. And he also, Norman replied to him saying the figure of 35,000 metric tons is correct. You know, because I don't know why Ross Norman put 90,000 tons there. And what's interesting, I got 2 thumbs up for my comment to Ross Norman. And I found that one of the guys here, as you can see, this guy, he thumbed me up, Vadim Bagaturia. He's a relationship manager. Guess where? UBS Bank in Switzerland, executive director. And he was an executive director at JP Morgan in Switzerland. He was a trader at Credit Lyonnais, FX, and domestic debt. So this guy actually thought I was right on my comment to Ross Norman. I'm not sure if Ross Norman has deleted his comment because of my reply. As I said yesterday, I found his comment again, but right now when I click on the LinkedIn page, it's not there anymore. So yes, there's still people out there who want to perpetuate this fake monetary system. And that's what the LBMA does. So before I finish, I'm going to recommend another book because of the bucket shop mention. Many of you might not know what a bucket shop is. So you will learn what a bucket shop is if you read Jesse Livermore, World's Greatest Stock Trader by Richard Smitten. It's a really interesting book, not just about trading in the markets, but about Jesse Livermore's life. So here on page 28, the book goes over bucket shops. And it says, Arnold Rothstein, known in the underworld circles as the Brain, was a genius with money. He started out as a gambler, but after a fantastic string of successes, he became an underworld king and lived like it. He was accused of many crimes, among them fixing the 1919 Black Sox World Series, the Shoeless Joe Jackson movie. the Chicago White Sox. His fortune was vast. His financial tentacles reached into every vein of American vice. Among Rothstein's many holdings were most of the bucket shops in the major cities of the United States. So here's the interesting part, and it just goes to show what the LBMA unallocated market is, and also the COMEX to some extent. Yes, they're starting to have to deliver physical, but I recommend that there's a series of 3 videos on Wall Street Silver by a guy, average person like us, who try to take delivery on COMEX, and he did. But he explains to you the whole process and how difficult it is. So let's continue. A bucket shop looked like a broker's office. So it's like the LBMA. It looks like a bullion market. It looks like where you trade gold and silver. But as Ronan Manley said, it's just credit. It's not real physical gold and silver, at least the unallocated market. It had a gallery for the customers, a chalkboard to record the stock quotes, and an active stock ticker spewing out the daily trades on an almost instantaneous basis. But it was more like a horse betting parlor than a true broker's office. At a bucket shop, traders could play the market on 10% margin. I would say LBMA is more like 2 or 3% margin. You can leverage a lot more than a bucket shop. In other words, traders needed to have only 10% of the piece of the stock they wanted to buy. The rules were simple: put up 10% and make a bet at buying a stock. A ticket with the buy number would immediately be printed and given to the purchaser. The ticket would indicate the time, the price paid for the stock purchased, and the number of shares purchased. The purchaser would watch the quotes, and as soon as the stock lost 10% of its value, the shop moved in quickly and swept away the money. Conversely, if the stock price went up and the trader won, the trader went up to a clerk who marked the ticket stub with the price of the last trade on the stock ticker. Then the trader went to the cage window to collect the money. It was a sucker's play. The house won 95% of the time. Most important for the functioning of the bucket shop, the money spent to buy the stock was never sent to the floor of the exchange. So there you go. The money spent on unallocated gold never goes to really buy any physical gold or sell any physical gold or silver. It was simply booked by the bucket shop, LBMA, or the bullion banks too. The bucket shop would hold the bet like a bookie. Bucket shop action was quick and fierce. Traders could buy as few as 5 shares or as many as the house could cover, thousands of dollars worth. So here's the connection to Livermore. Because Livermore had no capital, no stake, it was inevitable he would enter the bucket shops, a world controlled by crime bosses. It was only a matter of when and how. In 1892, when Livermore was 15 years old, his friend Billy, another Broad Crew kid, approached him. "Jesse, you got any money?" So that's how he started, through the bucket shops. But eventually he went to New York and he opened a real stock brokerage account. And that's what the LBMA Unallocated is. It's a bucket shop. So there you go. If you enjoyed this video, make sure you hit the like button. As I said earlier, make sure you share it far and wide, and think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Facebook, Twitter, and all these other platforms below. So I wish you a great rest of the weekend, and I'll talk to you later tonight at 9 p.m. Take care. Bye.